market euphoria as the stock market is closing in on all-time highs. Today, we're going to talk about when to sell, when to buy, and give you our specific game plan. So sit back and let's get started. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. On the subscriber front, thank you so much. We have had a massive explosion on our site, 17,000 plus subs. That is awesome. So today, our agenda, as normal, we're going to go through the big charts, okay? Talk about the signals. We're going to do sector spotlight, where we're going to talk specifically what we look for when we're selling and when we're buying, what keeps me up at night, and game plan going forward. Let's go to the big charts. All right, first up, want to let you know I recorded a quick video on our process, should be coming out this week, but it consists of the charts, which is technical analysis, fundamental analysis, and then we look at the cycles and we bring those together. But I always confirm with the chart. So what do we see here? Most important thing, we've had a positive crossover on momentum. Have Andrew zoom in there. So right now, we are positive for the first time in our long-term monthly chart. Is there anything else we see here? I drew a line from our 09 down, and then I drew a line here. So that shows you we don't have a lot to go here. So we're either going to have a breakout this week or not, to be determined. And always I continue to point this out, that negative relative strength divergence. As we've gone up, this goes down. That is not a good sign. You can see it over here, very similar circumstances, but again, still positive. Same thing on weekly, okay? We've had the positive. You can see we're right there, right up against the all-time highs. Big week this week, folks. We're going to see what happens. This, of course, is positive as well. Well, what about the short-term view? Well, when I look at the short term, there's a couple things. Again, okay, 33.97 is our all-time high. Are we going to get there? I think we will this week, specifically because it's options expiration week, okay? And there's a lot of calls out there, so there's a good chance that that will go above that, but to be determined, okay? Anything else below here that I see? I mean, when I'm looking at it, it is positive. So for the first time in months, all three signals are positive. We're at 22 on the volatility index. Again, not a great sign. Below 15 is really bullish. Above 25, we have to be careful. 31, we don't buy. MACD, which is momentum, is kind of deteriorating a little bit there. So we'll see. Big week to be determined, but we will know a lot by week's end. Still, the broad market, New York Stock Exchange, which is the broad market, is still down 10% year to date. It is looking like a crossover. Remember, the S&P is being driven by 5 stocks right now. So then we look underneath the hood, and again, NYSE, new highs minus new lows, and we're just not seeing it. Again, it's very like, Today we have 77 new highs minus new lows. It is early here, I guess about 9:45 on Monday morning. So we still haven't had that big thrust that we've seen in the past. So another big story is Treasuries. What's going on here? Okay, here's our trend line right there. We were coming up against it. We are down a little bit. This is one of those charts that does not update during the day, but we still feel it goes lower. Probably going to add to our Treasury position today. If you watch us regularly, you know that we took profits down here. That was the prudent thing to do at that time. Another interesting thing, I don't bring this up often. I should show that chart, but we look at who's buying and who's selling, we have the largest amounts of shorts on the 10-year Treasury in 3 years. We've always gone against that because obviously we bought back here in 18. It's been a great move for us. So we will continue to watch this week. And the other thing I've been talking about is the US dollar. Fed dumping in cash, right? Devaluing the dollar, not good for all of those folks unemployed. We're going to talk about that. Last week, dollar was down about 0.5%, has had a big move. Not surprising to have a little counter trend move there, but this is still one of our calls for the cycle win right now. Dollar down and commodities up. Speaking of commodities, let's go to Sector Spotlight. Okay, Sector Spotlight, we are going to get into buying and selling. Interesting, playing golf with a guy last week, and he was bragging about how much he made on one of the FANG stocks. And I said, you haven't made any money. He goes, yes, I have. I said, it's paper gains. At some point, you have to take profits. Why would I do that? I said, that's how you make money. You put it in your bank account, right? You don't just, I mean, you can hold forever, but you should be selling along the way, especially in a overvalued market like this. So gold has been one of our big talking points over the last several months. I've talked about these consolidations, then a breakout. Going back a month, I talked about the breakout, and boy, do we get it, okay? That is a huge breakout. The problem is, when it did break out, it was too much. It went way too far, okay? And a couple weeks ago, I had mentioned that we started trimming. I took about 3% off. Why? Okay, that's relative strength. When you're above 70, that means you're overbought. I mean, we got to a point, we're in the 90s on gold, okay? So what did I do? I took out 3% of gold and I waited. Now, I happened to be fortunate because then we had this little bop down last week. So what do I do next? Well, I was waiting, okay? And for me, I ended up going into the gold miners. I did that last week, late in the week. Why? Well, did a video recently about some financial tips. We'll have it here. I talked about taking losses and gains, and it can explain the theory, but basically, I didn't want to go back into gold just because it would get sloppy with cost basis and everything else. I happened to choose the gold miners, okay? Now, today, it happens to be up 4% because it was announced on Friday that Berkshire Hathaway, Warren Buffett, took a big position in a gold miner. So obviously that has helped our trade today. So I'm back to my full position, except the fact that I have it split between gold and gold miners. And then the same thing with silver. I mean, if you look at silver, that price is not updated. It is up today. Silver is up over 50% in the last month. I cut that position in half. Second time I've taken profits and did the same thing, went into the silver miners, okay? So I've locked in that profit for our clients. I think that that is the way to go. Now, we've talked about commodities, right? Dollar down, inflation up. I'll have Andrew bring in this chart. Last week, we had a big, in fact, the biggest read in CPI, okay, which is inflation. Okay, biggest month over month. That's what's driving our commodity play. This happens to be a weekly chart, and I wanted to show you this because you can kind of see the different channels that I've put here. You've got a channel here, you've got a channel there, but right here is the next level for a breakout. As of now, we're up about 1 and change today, and it looks like we're ready to break out to another level of commodities. Again, there's several of them that I hang on to. Okay, let's talk about one of them, copper. Now, why copper? Dollar down, copper up, okay? So what do we see here? Well, I actually like this view right here. If you look, okay, I'm gonna go like that. Looks like a flag, right? That's called a bullish flag. Not surprising, we had a big run. Okay, so when you have a big run, you're still in a bullish trend, and then you consolidate, that's an opportunity to add. That's what I did last week. Still like copper going forward, and it is up again today. and you look at lumber. Hello, lumber. Now, what's beautiful about lumber, besides the fact it had a huge move in the last couple months, we've got the inflation play, supply versus demand, okay? Housing is taking off because of low interest rates. So we've got inflation, we've got supply demand. Don't have the same idea when it comes to oil. I've had questions about that. Yes, you expect oil to go up, but the supply and demand, right? They're not there because a lot of people still aren't traveling a lot. Do like lumber right here, but like I said, take a look, right? Consolidation came down, then it took off. We're back up there pretty high. I think we see a consolidation here this week. Hopefully will be an opportunity for me to add to that position. So again, this is what you try and do. Lock in some of those gains. This market is very fluid right now, okay? I did another video about 60-40 being dead. I mean, I'm in all kinds of places right now, and I'm looking to obviously continue to make some money, lock in those gains because we are at all-time highs. Now, Biotech, all right? And I brought this up. This has been a holding, okay? And what I see here, hopefully you do as well, okay? We have that, and then we have that. That's a classic head and shoulders, left shoulder, right shoulder, and the head. Okay, so when we had this a couple weeks ago, I actually added to that position. I thought it would hold its 50-day moving average. It did not. It does look like it's holding here. Momentum is going up, so I like that. So I'm not quite ready to trim this or sell it. I'm going to give a little bit more time. I think biotech and healthcare in general is obviously still a strong signal going forward. Hopefully that gave you a better understanding of our process on how we buy, sell. Right now, let's go to what keeps me up at night. All right, what keeps me up at night? Before we go there, if you like what you see, hit that like button, subscribe, information below if interested in an appointment. So I love this from our friends at Hedgeye, Chairman Powell, stuffing money into the market. Last week they added to the balance sheet to the tune of $12 billion. I mean, I'm doing a video on that. I have finished the research. Look for that to come out of why I think the Fed is really screwed up here. So first up, not a new chart for me, new to our viewers, but it kind of shows the complacency right now. Okay, here's your S&P. Obviously, it's gone up. This is called your put-call ratio. Okay, puts, calls, right? You're hedging against downside calls. You're expecting it to go up. And look where we are. We are way, way low. So when you're this low, you kind of look for a counter trend move. If it's coming down, that's when you buy, right? Because right here, if you go up here, it's kind of opposite, right? You had the highest amount of puts in the market. When the market was down, it was too late, okay? If we start going up, then we'll change our position. Maybe we hedge a little bit. But most importantly, I want you to understand, this just shows the unbelievable amount of complacency in this market, which is just crazy. Why? Right here, coming from Charlie Biello, I grabbed this off of his site. S&P has reported GAAP, generally accepted accounting principles. Accounting, real accounting, not the goofy stuff they do, right? So you look at this year over year, minus 66, minus 57%. How about growth? Down 12%. Now, bring that together and look where the stock market is. An absolute, an amazing disconnect between the market and the actual underlying fundamentals of this market. How much? Right here. I updated this yesterday when I came in to prepare, and even I was surprised. So if you've seen this before, the black line is our S&P, okay? The red line is 20 PE, price earnings. That means overpriced. 15 is fair value. That's the average over the long term, and 10 is undervalue. If we were to go back to just a 20 PE, we're 29 on Friday, that would be a 31% pullback. Okay, so yes, this week I expect maybe a little move because of the options, but we are way overdue for even a 5 or 10% correction. That's what I started doing last week, taking some profits, locking those in and raising cash. But I mean, if I show you 15, okay, about 48%. Not saying it's going there. It just shows how overvalued this market is. Now, we've talked about this. The Fed has dumped in liquidity, but they can't help solvency, okay? Number of bankruptcies, okay? We are now at the level of 2009. This is going to get worse. Profits are down. We feel that unemployment, we'll get to that in a second, okay? We're still just at the beginning of that issue. We'll explain. There you go, right? Here's last week. So last week, the CNBC number is 963. They forget to add that in. So we still had 1.4 million, 3 million. We did go down to 28 million people unemployed, but it's 28 million people unemployed. Okay, so we feel that we're going to start seeing more white-collar jobs disappear as we go forward. So this number, it might go down a little bit, but don't be surprised to see it level off in the 20 to 25 million range, which is tragic, okay? How bad is it? Here's Houston, Texas last week. People lined up for a food bank, and if you look at those cars, these are regular Americans that are hurting right now. So much, in fact, share of adults with kids at home who can't afford to pay their children enough food. Look at that number going up to 19.5%. That is the disconnect between Main Street and Wall Street. This market has been inflated by the Fed, and it's just crazy. What percentage of U.S. households, this comes from Jim Bianco, expect loss of unemployment, right? You kind of see at the peak, and now we're going up again slowly, okay? Probably can't see that, but that's 35% right now. People expect to lose their jobs. Significant, okay? Confirmation where we are. I showed you that CPI. We are still solidly in cycle 3. Growth slows. Inflation accelerates. Fed is neutral. So far, we think they are very much behind the curve. We'll talk about that. And then stagflation is what we're seeing. All right, so we brought this all together. What's our game plan? I think you've heard it. I started taking profits last week, started raising a little bit of cash, maybe adding into some treasuries today or tomorrow, okay? We're at all-time highs without anything behind it, except euphoria, as I said in the title. That's the only thing driving this market. You buy stocks based on earnings and future earnings. Okay, so right now we're going to see, hey, if we break out above that line and get a true breakout, I'm in. I mean, I'm pretty much all in it. Now, anyways, I just took some profits last week to raise our cash to 6 or 7%. So I still think it's a time to be nimble, be smart, and don't be afraid to take profits. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.